is that part of the bullish thesis that it's so small and irrelevant that it can only get bigger? Like, is that part of the thought process here?
Yeah, and listen, if you go to the ludicrous thing that Paul Tudor Jones mentioned a while ago, and Stan Druckenmiller talked about, is 80% of Bitcoin holders don't sell ever.
Yeah. Correct. They're in cold storage.
And it's the same with Ethereum, with the staking and everything else. So your actual supply is 20% plus the miners. The miners keep getting halved every 4 years. So you've got no supply. So that's 20% of the let's say of the entire asset class, 2.7 trillion is actually available to buy. You bring something like an ETF and things go bananas, right? The more people who adopt it, the more the price rises. Also, the really key thing is, I don't know if you guys have ever seen the chart from Fidelity about the risk reward of assets. It's brilliant. So there's this big white page, all Fidelity branded, and here's a cluster of all of here's the NASDAQ, and here's gold, and here's oil, and here's all of that. They're all clustered in the bottom. Then there's a blank page, blank page, blank page, blank page, blank page, dot, Bitcoin. It's a fucking alien asset class. We have never, ever had an asset class with this risk reward over a long-term time horizon and this performance in all of human history.
So here's a question. I'm so glad you're here for this question, because I think I've been making this up, but you'll confirm or deny that I'm insane. One of the specialty, I think we're very lucky to have this asset in many ways. In 1999, when everybody was making money, the money was in the real world, which created its own recession and inflation because Wall Street people went out and bought Porsches, overpaid for this, overbought that. That was that bubble, right? You remember? They would go, the movie Wall Street. In this movie, when no one's selling, so the rich people aren't or the early adopters, the farmers, whatever we call these people, the industrialists, the aggregated, the hoarders, aren't selling. The phenomenon about digital so far to me is it's self-correcting inflation, meaning as people liquidate a little or get more on the speculative curve, the money just disappears because all meme coins go to zero. So really, it's its own universe that if that money was coming back into the real world, we'd have such fucking inflation. You wouldn't be able to buy a Porsche or a Lambo but in this world, they go further out on the risk curve and buy shit coins and meme coins and get scammed and do whatever. And the money just literally vaporizes on its own. And how does that affect your thinking of global macro?
Yes and no. Because the log chart over time keeps going up, right? The wealth keeps building. It goes from $1 billion to $10 billion to $100 billion to $1 trillion, right? It just keeps building. But your point is really crucial, is very little leaks back into the economy.
Right. And less, I think, if I listen to Fred Wilson, it's like, once you have a certain amount in the digital world, like me, I get scared. And I brought some back, some Solana back. I got scared. I sold some multi-coin. I'm a Canadian. Wasn't real to me because I wasn't using it. This time around, I'm playing with the stuff and the StockTwits audience and meme coins and building on Solana. Why bring that money back this time?
So, if I'm right that this is the fastest, largest accumulation of wealth in all human history, right? If it goes to 100 trillion, to JC's point, this is the S&P is worth $50 trillion, or the US stock market, entire US stock. That's 100 years of accumulated value.
It's mostly S&P, Raoul.
Yeah, it is. It's 100 years of accumulated value, and we're going to double that in a decade. It's like, this is la la land, right? The amount of money that's going to get made here is la la land. So what do they do with the money? I was speaking to a very famous hedge fund manager yesterday, and he asked his son this, and this guy is deep crypto, and his son is too. And his son's like 25, 26. He said, what are you going to do when you make your millions? He's like, well, I'll keep it in crypto. He's like, but when you take any money out, what will you do? He said, I'll buy property. And his dad was like, well, do you want to buy a super yacht or anything like that? He goes, no, it's a waste of money. So I'll buy property because it's an asset, and I will buy NFTs.
And that's what Rom said last week. I mean, honestly, the show, we have access to and then, you're a little more famous than Rom. Rom said this about
suntans in the world.
Yeah. Well, listen, suntan's a sign of creepy success. Hang on. But so real estate go up too, because, and Ron was talking about it being inflationary to real estate. If you're going to do one thing, and I would do the same thing, I never thought I would have 2 homes. I have 2 homes. They're small, very small footprint. Not that that means anything. It's just how I'm comfortable with my wife living our life. We don't want a lot of stuff. But in a world that the only thing that I would buy are other properties, right? And even then, like
in specific
very
places,
specific, very specific.
and you can work anywhere now.
Mm-hmm.
So you're not forced to live in metropolis X or Y.
Mm-hmm.
You get the choice, if you've made money, to live anywhere.
And
like I can live in Little Cayman or Grand Cayman or
and because of the leisure world that we live in and everything's acceptable, like, for example, my new favorite brand is ASRV, which is like a high-end local San Diego fitness / leisure wear, life wear, fashionology company. I can just put that brand can be worn at any location. So you need very little to go amongst your properties around the world, and everybody.
Can we bring this back to data?
Sorry,
Phil.
okay.
This is right up your alley, Phil. Data and Howard Lindzen data, right? Raoul data. Raoul, can you speak to the transparency of crypto markets and the public ledger that is all of these different blockchain networks that I would only kill to have in the bond market or the equities market or the commodities market? I mean, it's all there. Can we talk about that? Like, this, isn't that like the biggest thing here? Like the transparency?
Well, because when I first got into this space, it was because there was no transparency, and you don't own the money in your bank account, and you don't own the securities you think you own. And when you saw Lehman, you saw that there's a few collateral assets and there's all this leverage, and it's a big game of musical chairs for who gets a slice of the collateral, right? Nobody owns anything. Blockchain changes that because it's provable who owns it. You can give permission to rehypothecate them, or you cannot, right? So it's a game changer for that. But even in terms of trading, it gives you a whole new set of stuff you didn't have before. Like funding rates are just brilliant, because you can see in real time what you'd have to get from a prime broker at Goldman, how funding rates of a particular stock are trading. But here you can see it in real time. You can see when it's liquidated. If you add that with a bit of technical analysis, you've now got a really nice system to figure out, okay, have we got another leg lower, or is this over? Stuff like that.
Not to mention, you can see the
moves.
wallets. You can see the wallets, Raoul. You can see Paul Tudor Jones's personal portfolio in real time for all intents and purposes, because you have the track records of all the wallets, so you know who's good and who's not. You got the real smart money, the real dumb money.